You know, we usually talk about the health of American democracy in political terms, right? Left versus right, red versus blue. But what if we looked at it like a Wall Street analyst? Well, that's exactly what we're going to do. This isn't about taking sides. It's a straight-up financial risk assessment of the U.S. system. We're talking about what this all means for investments, for the markets, and for global stability.
And it all really boils down to this one kind of unsettling question. Is the U.S. no longer a democracy? Now, this isn't just some hypothetical for a late-night talk show. This question is actually being asked in the boardrooms of global investors because, well, the answer has huge financial implications.
So, before we dive any deeper, let's get on the same page about what we mean by democracy here. Through this financial lens, it's not really about voting booths and rallies. It's a framework. It's the system that guarantees stability, predictability, and the rule of law. Honestly, it's the absolute non-negotiable bedrock for any serious investment or economic growth. It's what makes a country a safe bet instead of a high-risk gamble.
Okay, so this brings us to a really critical finding from the international groups that actually track these things. We're not just talking hypotheticals anymore. There's been an official downgrade.
And here it is. This is the moment things really shifted. Back in 2016, the United States was officially reclassified. We're talking about major global indexes, like the one from the Economist Intelligence Unit, officially knocking the U.S. down a peg, from a full democracy to a flawed democracy. Now, this wasn't just a tough headline. For investors, this was a fundamental change to the country's entire risk profile.
So what's the difference, really? Is it just a label? Not at all. It's actually a pretty big deal. See, a full democracy isn't just about having elections. It means you've got strong checks and balances, an independent judiciary, and crucially, high public trust in those institutions. A flawed democracy, on the other hand, well, it still has elections, but it's showing major cracks. Things like serious weaknesses in governance and really low public trust. It's a system that's clearly under a lot of stress.
So how does a label like flawed democracy actually translate into real-world financial risk? Well, the analysis breaks it down into three specific threats that investors are now, for the first time, having to seriously factor into the American market.
All right, first up is something the source calls the collateral risk. And this one gets right to the very heart of what makes any modern economy tick, a trustworthy legal system.
And this quote just nails it. Think about it for a second. Every single contract you sign, every investment you make, it's all backed by one simple assumption, that the legal system will enforce it fairly. That system is the ultimate collateral for everything. So what happens when that system starts to look shaky or unreliable? Suddenly, the value of everything is up for grabs.
So what's weakening this all-important collateral? The analysis points to a few key things: making the justice system political, direct attacks on the independence of judges, and, of course, any kind of talk that suggests leaders are somehow above the law. Each one of these things injects a dose of uncertainty into the system. And for investors, that means they start demanding a higher risk premium. Basically, they want to get paid more to take on all that extra risk.
The second major risk flows right out of that first one. It's called governance risk. And this is all about how predictable and stable a country's leadership is, specifically the transfer of power.
I love this analogy. A stable election is like a Fortune 500 company's succession plan. It's orderly, it's predictable, and it makes sure the business keeps running smoothly. But the moment you start questioning that process, the moment its legitimacy is attacked, you introduce this massive, terrifying uncertainty. And if there's one thing the market absolutely hates, it's that kind of all-or-nothing coin flip kind of risk.
And the things driving this risk couldn't be clearer. At the very top of the list is refusing to accept legitimate election results, because that just turns a predictable handover of power into an existential crisis. Then you add in things like the partisan redrawing of voting maps, gerrymandering, and you get a system where political power might not actually reflect what the people want at all.
And all of that leads us right into the third systemic risk: regulatory risk. This is all about what happens when way too much power gets concentrated in one place. In this case, the executive branch.
Now, this is where it gets really interesting for day-to-day business. I mean, think about it. If the rules for everything, from the environment to the financial markets, can be completely flipped overnight, just based on the whim of a single leader, how can any company possibly make a 5 or 10-year plan? That regulatory stability that businesses rely on, it just, poof, evaporates.
And this risk is really being fueled by a couple of key things. A growing use of executive orders to just bypass Congress, and this is a big one,
plans to clear out thousands of nonpartisan career experts from federal agencies and replace them with political loyalists. Doing that would basically turn these stable institutions into political weapons. Okay, so let's pull all this together. When you add up these three massive risks, collateral, governance, and regulatory, what's the final reckoning? What are the actual consequences for the US and, frankly, for the rest of the world?
For decades, the United States benefited from something called the democratic dividend. It's a simple idea. Because its political system was seen as so incredibly stable, it had a lower cost of capital. That means it could borrow money and attract investment way more cheaply than pretty much anyone else. But as this new political risk creeps in, that advantage, that dividend, is starting to shrink. That low bar is getting higher.
And make no mistake, the consequences here are global. The analysis argues that this democratic slide leads to a huge loss of credibility on the world stage. You know, when America is busy with its own internal political fights, it creates a power vacuum, and you can be sure its rivals are more than happy to step in and fill it. And that instability, it directly threatens the international trade and the supply chains that we all depend on.
And if you take away just one thing, let it be this. At the end of the day, the problem isn't that the U.S. has stopped holding elections. The buildings and the institutions are all still there. The real core issue is the destruction of the unspoken rules, the norms, the mutual trust that makes those elections feel legitimate, that makes the courts seem impartial, and that makes the government function.
And so that leaves us with the final multi-trillion-dollar question, the one that every investor, every CEO, and every world leader is now being forced to ask. For decades, America was the world's safest bet. So, what's the new price of risk for investing in America today? That's a question we're all going to be grappling with for a long, long time.